All right, well, let's see what's in store for these earnings season. I'm joined from our studios in London by the man who provides the global market report for ETX Capital, equity strategist Manoj Ladwa. Manoj, overall, there's so much concern about the economy. There's so much concern about these stress tests in Europe. What are you actually expecting for the earnings season overall?
Well, overall, Francine, I'm expecting fairly positive figures to come out of US companies, where we've seen stimulus spending have its effect in the first quarter, and I think it's going to have a knock-on effect into the second quarter as well. But looking at these figures, you've basically got to read in between the lines. Alcoa reporting today, they're the mood setter. They're going to kick off earnings. They're expecting a positive quarter, but that could be largely on the back of overall rising metal prices. Later on in the week, we've got the likes of General Electric, Citibank, Bank of America reporting their earnings. Financial headwinds there. I know Manus a few minutes ago reported on the financial sector could be reporting slightly lower. This could be on the back of volatility in the price of the euro. That could affect certainly General Electric to a large extent, because over 50% of its earnings is coming from outside of the US. So you've got to be cautious about these earnings. You look at the forward-looking statements as well, because the US economy is faltering. The figures coming out in June weren't so great.
So Manoj, talk me through exactly what these equities are doing, or where you see some potential buying opportunity compared to some of the currencies, compared to some of the bonds we're looking at.
Well, overall, equities haven't been doing too badly. I think they've been pricing in a positive set of corporate numbers. So looking at stocks over the past few days or so, they have been rallying, and they have been rallying on slightly increasing volume as well. But this could all start to peter out from later on today, later on in the week as well. So we could see money flows coming out of certain sectors. We've seen increasing the price of material sectors. They've been doing particularly well. A bounce back in financial stocks as well. But once again, money could be coming out of these sectors as these corporate earnings start to be announced.
How are European earnings actually going to stack up compared to the US ones?
Well, I think European earnings will struggle, and I think that will be largely down to the stress testing of the banks. The results are coming out on July the 23rd, but there's a massive uncertainty with regards to these figures. Ultimately, they won't be looking at sovereign debt exposure for the European banks, so they're not as stringent as the UK test or the US test, and this is a big uncertainty going forward, and this could impact on European earnings. Do you want to be invested in European stocks? Is probably on the no side. There's probably value elsewhere out there.
Yeah, so people like you are really looking at these stress tests to give them an indication that they're credible, Manoj, and also that they can withstand, or what comes if they can't withstand these stress tests. What are you looking to have out of this meeting here in Brussels?
I'm looking for further clarity with regards to what's going on in the Eurozone. There has been increasing talks recently that the euro is going to zero. I don't think that's likely, but there is a shift for more exposure, more clarity, more vision coming out of Brussels and coming out of the Eurozone. We need to have more clarity from the banks and exactly what they're exposed to for Europe to be a viable trading opportunity.